right, we're just gonna go that way. Okay, so it's been a little slow. For the past 4 years, we had a pretty big inflation, and interest rate shock, and it really hurt sales activity. So I'm doing a quick study on sales activity because I believe that sales activity gives a really good.
Grace, I'm sorry, there's some conversation in the back.
Oh wow. Sean, can you help me out back there? Can you guys hear me now?
Yeah.
Great. Well, so I'm doing a quick look into the RMLS data and sales activity from previous cycles. So 1999 and 2000, that was a dot-com bubble, and that was an interesting cycle. And then the Great Recession in 2007, also a very interesting and difficult cycle. And then now we've got the interest rate shock and inflation shock of 2022. And so we are hopefully at the bottom and on our way up. And I think that there's some good data that kind of shows it. So this is me. Hi. Owner at Uptown Properties. Also a licensed broker for, like many of you guys here. So we're just going through some cycles. So if we go through, dot-com bubble, they're interest rates were still pretty high in the 90s, and so after 9/11, the government dropped interest rates pretty aggressively, and the same thing happened after the Great Recession. And so those are two very interesting and also important factors when it comes to those two cycles. So and then unfortunately this cycle is caused by inflation and interest rates going up. So moving on, so interest rates, this is very important. Interest rates have gone up about 3% since since 2022 and all of the stimulus and helicopter money that was given out by the government. And so inflation has been rough, and it does seem like the Fed, as of yesterday, is not interested in lowering interest rates. Here's an interesting piece of the chart from the last table. So I've circled two periods where interest rates dropped pretty aggressively. And these two time periods were also, there was also a lot of building and development during these two periods. And you'll see that, and I think that this is, a repeating pattern where you'll see very large price increases on real estate. It comes with development and drops in interest rates, and then you get massive price increases. So more interest rate stuff. Okay, so cycle one, we're looking, so this is, the data right here is the Portland Metro, including Vancouver, and this is just January through May 31st. So these are sales January through May 31st. If you can see this cycle, steady increase, dot-com bubble, there was a slight 5% dip in sales activity. So it was like that recession. The dot-com bubble is basically didn't mean anything to real estate. And so, honestly, 1999 through, 2006 was an incredible period, a solid 10-year run, or not 10, 8 years. You can see prices going up, sales volume going up, great period. Then running up to 2006, this is when development really started going crazy. 2006, 2007, 2008, there were a ton of deliveries, single family homes. It not as many multifamily deliveries, and also there was a little bit of unscrupulous lending practices, and so that caused the massive drop in the median price. So that's almost 15%. Actually, no. But 285 to 215 is the low. So that's 70,000. So that's a 25-30% drop in home prices. And so that is one of the reasons why there were so many REO properties and so many foreclosures, and like that period, it's that drop and the so many people being underwater that caused like that amount of distress, people giving their homes back to the bank. And you're seeing that right now with office buildings and some commercial properties, but you're not seeing it with houses. And you'll see because if you notice coming out of this, sales eventually rebound, but they dropped almost 50% from 2006-07 to 2009. And so like that's the real study here, is looking at sales activity, because we spent about a five-ish year period at less than 40% sales activity. And sales activity like really boosts a local economy with people being able to access equity in their homes. Like it means a lot for literally everyone who's employed. If you're able to, like, when home prices go up, everyone who owns a home, and that's about 50% of people in Oregon, feel a lot, they feel wealthier. Their net worth has increased. And as well, if you're able to sell your home, you're able to access that equity, you have those funds, you're able to tip more at the restaurant, you're able to go out to dinner more, you're able to buy more things. And when your equity has shrunk and it's locked in, the economy is just not as vibrant. And so that's kind of where we're at right now. The Great Recession, we had about 5 years of less than 50-60% sales activity, and now we are looking at pretty much 4 years in a row of around 60% of peak sales activity. And so the key difference here is that the government is not dropping interest rates to assist, to try and save the real estate market. And the nice thing though is that we do seem to be kind of tipping out of it, like with steady growth. And just looking at the May numbers, I don't think they made it into this presentation, but 25, I think that we sold about 500 less homes. We did sell slightly more in 2024, and I think that's because interest rates were significantly better in January and in February of 2024, interest rates were really good, and so more sales closed in May of 2024. But overall, we've just got steady, more sales activity, and prices are kind of remaining steady. One thing to note is that inflation is real, and it's happening, and so there is a little bit of a recession like that everyone is going through. Home, you're not able to buy the same home that you could for $550,000, and you can't. I mean, if you have the same amount of cash that you did, 5 years ago, you're not able to get the same amount of home just because of interest rates. But as well, if you buy something that needs a little bit of work, that little bit of work costs significantly more. And so it's a little bit of a different dynamic than it was 5 years ago. So, prices have remained steady. And if we go back to the Great Recession, if you'll notice, sales volume rebounds, but prices dip a little bit, like as sales volume rebounds. And so like that is something that is like we're going to be steady at these prices for a little while, but sales volume is going to increase. And because people have to make life decisions, as your family grows, as you get a better job, like people will need to get bigger houses. And essentially, there will be situations where, someone's going to have to give up their 3% interest 30-year mortgage because they have to move. And so after some period of time, there's only going to be like maybe 30 or 40% of people who are like, I'm never going to sell my house because it has a 3% mortgage. Like after so many years, that number will dwindle, and we'll have a normal market again where people are transacting, and we're going to get back to maybe not peak numbers immediately, but it's going to be steady growth. But during that period of sales going up, it's possible that prices may fall, or as people are waiting for the market to recover, they're going to have to sell. And when you have to sell, that causes prices, or that it makes it so that you can't get the maximum amount you want for it. Okay, there we go. Yeah, I think I have nailed it. Does anybody have any questions? Any questions or thoughts? Like the numbers as far as May for this year and this year in general are ticking up. Like we're up maybe 2 or 3% above where we were last year.
Hey, question. I'm sorry, go ahead.
Yeah, go ahead.
How about the commercial properties?
Commercial properties. Yes, commercial properties are in a much different situation. So, I mean, I do multifamily, and NOI is how you value a multifamily property. And essentially, right now, with inflation, expenses are way up, and rents have remained flat. So, kind of like prices. And so that, calculus creates a smaller NOI, and with interest rates also being higher, it makes it more difficult for someone to buy a property and have it cash flow for them. And so either that person is having to bring in more cash down to buy their commercial property, or they're having to buy a property that doesn't cash flow. And that doesn't work in commercial real estate, except for, very, very few big pocketed investors who can, make those deals work. And so yeah, commercial properties. I mean, if you're talking office downtown, that is everyone knows that's been crushed. That market is probably down 65%. Maybe even more if you're talking Big Pink. Multifamily is down probably 25 or 30%. And it's because how difficult it is to get a loan, and the fact that expenses have gone up and rents have stayed flat for 4 years. So the outlook, though, for multifamily, and I can't say other types of commercial property, but for multifamily, the development pipeline has absolutely collapsed, and so there's not very much new development coming in, and the all of the new units that have been delivered, we had record deliveries from 23, 24, and 25. We're talking probably 7,000-8,000 units delivered each year, and in 2026 we're projected to have about 2,200 units delivered, and then it's even less in the future. And essentially, once all of those deliveries are absorbed, with new people moving to town, then the supply is going to be, their occupancy will go up, vacancy will go down, and there won't be any new units, and the city will be saying, "Oh, we have a housing crisis. There's not enough homes," and that's part of the cycle. So, with real estate activity, we are down 40%, but we've been down 40% for about 4 years. And so, my thesis is that we are near the bottom, or coming out of the bottom of the cycle, and it's the same thesis with multifamily and other investment properties.
Chris?
Yeah.
I was talking to somebody the other day that's working with the Lloyd Center conversion. They were going out and defending their work again. But one of the things she told me was, depending on what's done with the parcels after it's pulled down and chopped up, it could represent 5,500 new doors.
Yeah.
So that one section is almost like a year's worth of delivery. Now, when it's going to hit, I don't know. Is it going to be approved specifically for apartments versus anything else? I don't know. But that one parcel could be gigantic for the city.
I know. And then the Moda Center remodel, like that. But that type of development is, it's something that the city needs. Like, we need people to start planning development now, because that's not going to be delivered for 5 years. If people aren't planning developments now, we're not going to have housing supply in the future. So, honestly, that is a phenomenal project that I hope goes through. I'm not worried about new supply, because everyone, starting basically the beginning of 2023, they haven't been planning projects in Portland. The projects that are being delivered, the ideas that were created for those projects are from 5, 6, 7 years ago. Somebody had an idea and they wanted to develop a building during the great run up, and no one saw 2022, 2023 happening. No one saw the real estate market crashing, the way that it did, and inflation going up. So I welcome it. Bring on the developers, bring on the institutional money. That sounds amazing.
Are ADUs considered to be a big help or not really?
ADUs.
It's a bit of a boom. Finally allowed, and we're talking about it, or not? Is that not? It's something, but it's not meaningful.
The fact that you can put 4 units on any parcel in Portland, and that the city is essentially trying to add density, it's a good thing. It helps the housing stock kind of renew itself. If somebody is converting a home into a fourplex, that there's going to be 4 brand new units versus 1 older home. And so newer housing stock is great because it's higher rents, and that's part of the 8,000 deliveries in 2023, 2024, and 2025, the 24,000 new units. There was also a lot of institutional money coming in, and big projects like Slab Town being built, and just like a ton of new development. A lot of like really nice luxury studios that are 300 square feet. Cool. Well, thank you guys. You can find me at here. Yeah, and if anyone is looking for a property manager, Leo is your guy to talk to. He's very good at his job, and yeah.
I'm not a property manager, but I will work with all of you to help you get your property managed.
All right.
Anybody want to top up their drinks? I don't want to wrangle cats, but I'll give you 2 minutes. You need to. Go ahead.
Just, property under contract now for the ADU.